In the Money is made possible by financial support from Old National Bank and Chicagoans like you. Thank you.
Hello, welcome to In the Money. I'm your host, Kimberly, a CPA and a financial executive who today is financially secure, but was not always. As a responsible business owner, I need to make sure my business is profitable as possible from a financial perspective. As a person of the community, I need to make sure that I'm giving back, but not to the point it puts my business in jeopardy. How does one balance the needs of the community and the desire for business profits in one company? Many times we believe we must suffer financially to help others, but I say you need to be sustainably profitable to help others. You can't help anyone if you're out of business, and this includes paying and managing taxes. There are many routes beyond creating a nonprofit for your business to be profitable and to do good. The business must be profitable enough to offer employees in the community stable, good-paying jobs with benefits, as well as the ability to utilize the services of local vendors. And today, I have such a success story. Joining us in the living room today is Marianne Jordan, a successful business owner who is helping others. Welcome to the show, Marianne, and please share how you went from employee to employer.
Thank you for having me. I really appreciate it. You know, I spent 25 years working in non-for-profit where I didn't see a profit for myself. And so when the agency closed, I was somewhat at a loss. Even though I found new employment, I kept trying to figure out how can I do something different to sustain myself going into my older years. I wanted to have something. And when you work for a lot of non-for-profits, there's no pension, there's limited income to look forward to when you get older. And so I was actually a senior. And so I'm trying to figure out what can I do. And so I created my business. And I went into doing what I was doing when I was working for a large non-for-profit. And it's been very beneficial, and it allows me to give back to the community. And so when I started my business, I was helping clients who actually were struggling with their businesses and showing them how they could take their businesses to the next level by putting some systems in place, putting some processes in place, and just helping them to grow and to learn some new opportunities and to link them with community partners, really to establish themselves in the community. And so what I had was a lot of clients who were coming to me who could not afford my services. But I felt like I needed to do something to help them. And so when the opportunity came about, we wrote a grant as an LLC to get funding. And so we received almost $700,000 to support 60 businesses in growing. And this is specifically for starter businesses or businesses that were struggling. And so my goal for 2023 is to help those 60 businesses grow and develop. And so through that grant, we were able to hire 6 new staff. And I heard you talk about putting back into the community. And so for us, that was a win-win. We were able to hire 6 people who were not employed to come on our team. And the great thing is most of them had businesses. And I wanted people who knew what it took to grow a business. And so I hired people who actually had successful businesses or were struggling with their businesses. And so they used this as an opportunity to help these 60 folks. And so right now we're at 30 businesses, and so really excited. And so it was easy for me because I had been in the trenches and I didn't want to drown.
Right.
You know, at my age, I needed to figure out a way, how can I feed my household, move into retirement without struggling? And so I felt I needed to do that. You know.
And so just to be clear, you have your for-profit business that has this pricing where people who can afford you can use your services.
Yes.
And through the grant writing process, you're able to get funds to help others who maybe couldn't afford your services. They're basically subsidized, so to speak. And then, but you were able to expand that as well. So for your LLC, what does LLC stand for?
Limited liability. And so one of the things that we wanted to do, we had our clients who came through us as a consultant to help build their businesses, and they paid a cost for that, for us to be consultants to help grow their businesses. And then we had our clients who were coming, it was people coming to us who could not afford, they couldn't pay the retainer, they could not afford for us to put systems in place. And so that's how our other program came about. We received funding to help establish that and provide those services for those clients. And so that's a separate clientele that we deal with. These are clients who come through, have wonderful ideas, maybe baking cookies from home or cooking cakes, but now they want to take it to the next level. They can't afford to do a website. They can't afford to get business insurance and things like that. And so through Pathway to Ownership, this program, they're able to get like a $1,200 grant to actually pay for some of those fees.
Oh, nice.
Because what you find is that when you're working every day, like I did at a non-for-profit, and I want to start a business, it's difficult to even pay the $150 it costs to actually secure a LLC. You have to choose between, am I going to pay tuition fee? Am I going to take this $150 and do that? And so through our program, you don't have to make that choice.
Right.
If it's something that you're serious about, we're going to help you. If you need to get marketing material, we have clients who they've had an LLC, but now they haven't did the annual report. They can't come up with the fees to do that. We do things like that. And so it's great because we have this team who is very diverse and who can provide those kind of additional services to them.
Now, why did you choose the business structure of a limited liability company versus a sole proprietorship, a S corporation, for example? Why that particular one?
Well, for me at the time, it was easy.
Okay.
And that's something that you heard about, to do a LLC. When we make changes, we're looking to make changes because now we're growing larger than we expected to grow. And so as you grow, you learn. And so we started from the basis because that's something that I heard along the way, you know, get your LLC to start your business. And it was something small, but it grew so quickly. And so now we're talking to our attorney and our accountant to figure out some new avenues to take to grow our business.
And then for our listeners out there, a LLC limits your liability, like if you got sued or something, to the assets or the income of the entity, and they can't really go after your personal assets.
That's right.
There are some exceptions to that, but that's generally what it means, and that's why some people would choose an LLC to protect their personal assets.
That's right.
Versus sole proprietorship, there's no legal protection.
That's right.
Of operating your business, separating from your personal and the business. Okay. Yeah. Now, from the people who are seeking your help, and you went through this grant process, how did you know to even do that?
Because I spent 25 years doing that for an organization I worked for at the non-for-profit. I gave all that talent to that organization, and so it became easy for me to do it for other organizations. I knew what the systems they needed to put in place. I knew what funders were looking for, and so it became easy for me. And so when it came to us, we said, you know, we're writing these grants for everybody. We need to do this for ourselves because we thought about that client who deserved the same attention but could not afford it. We saw a lot of people on a regular basis that would come to us and they had wonderful ideas, but they couldn't pay us a retainer. Or they didn't have the money to invest in their business, just the simple things. And so when opportunity came out, it fit our services, and we said, let's do this for the folks we considered the underdogs, that who could not, but they had these wonderful ideas. And so every day we have people coming into our office with these wonderful ideas who've been doing the work, putting the work in, but they don't have the support or the network, or they don't have any heroes behind them saying, yeah, you can do this, or don't do this, let's do this. And so it was an easy choice for us to do this.
Now, when you left the nonprofit world, did you ever see yourself doing this as a for-profit and helping others?
No.
Okay.
No, I knew I had the talent. And it took the longest for me to say, I can do this on a regular basis. It became so easy, and I had so many businesses that we were helping who said, you're great at this. Or, you know, to take an agency, one of our clients, for 20 years, her revenue was between 80 to 100,000. We worked with her for 6 months, and now her revenue is $1.6 million.
Oh, wow.
Exactly. She went from having 2 part-time staff to 33 staff and 3 sites.
So what are some of the tips you would give businesses out there that you can share to help them improve their business?
Get in a network of folks that's doing what you're doing. What I find is that a lot of clients or people that are starting businesses, they work in a silo. And then also the ones that are successful don't want to share that information with folks. And so what we provide to them is that network of folks who are doing what they're doing. And so part of the program is that we link them with mentors. We do that with even our paying clients. We link, if you're a CEO at a company and you're at a non-for-profit, we're going to connect you with another CEO who can help and guide you and put you in the faces of other folks that can help you. We do that with our small businesses that come through. We have a client right now who's coming through who is a designer. We love this guy. He's 75 years old.
Oh, wow.
He's actually sewn for some of the greatest entertainers, and he's stuck. Some of his tactics that he's using is antiquated, and he knows that. And so we've linked him with people who can help elevate that, create a website, and bring in other resources to him. We look at connecting them with other mentors who are doing great, where they can sit and have open conversations, whatever their fears are, to be able to answer those questions. You know, how did you negotiate a contract? What are fair prices to ask people for? How did you get inside this organization? And when you talk with a lot of these clients, the ones that are successful, a lot of it has to do with networking.
Right. So either they can find someone who offers your services, but what other things can they do if they can't find a person like you? They can kind of network on their own, go to business conferences and network. What other tips would you give?
I would give them to make sure that they have human resources in place. If they can't, they need to be making sure that they're following the labor laws and things like that.
That's only if they have employees,
yes,
right?
Exactly. The fact also accounting is really critical. That was something that we had to work on at the beginning. We couldn't afford that, but it was important as soon as we started making money that we hired an accountant to oversee our finances. Stay in the loop of what's current. I also advise people to research what other people are doing in other states, opposed to Illinois, and just networking and constantly putting time in your business. I learned a long time ago, the same time I give an employer when I work for that non-for-profit, I gave time every day, at least 5 days a week. You have to do that with your business.
Okay.
You can't put it to the side. You got to put time into it.
Well, thank you for those wonderful tips and joining us today. There's a lot for people to do there to help their business.
Thank you so much for having me. I appreciate it.
Me too.
Tune in this Friday at 7 p.m. on CAN TV 19 as I discuss becoming a foster parent.
Family comes in so many different forms and can happen all throughout the life course. We just have to be open and accepting of however it shows up.
Now, as a for-profit business, you have gotten some ideas on how your company can give back to the community and not break the bank. Speaking of profits, it is now tax season, and joining us in the living room today is business tax specialist Felicia Cook to help us with some basic tax tips for your business. Welcome to the show, Felicia.
Thank you for having me. It's a pleasure.
So now we're in tax season, everybody's stressed, running around, and the biggest thing that I see is record keeping.
Yes.
So what is the biggest thing that you see that people are missing when it's tax season for a business?
Yeah, I would say the biggest thing is that people are always wondering why they can't take advantage of certain tax credits, and it's because, as you say, they just don't have the records. They haven't done the necessary bookkeeping that allows them to take advantage of those different tax credits. That's just the basis of a deduction or a credit. You have to be able to document that you've done the work or that you've met the requirements in order to take advantage of it.
Do you see a lot of commingling, meaning people using their personal and their business and they putting it together instead of keeping them separate? Does that impact your tax?
It absolutely does. I see a lot of it. It's excessive, particularly in smaller businesses, because sometimes it's just, you know, I hear a lot of people say, oh, well, it was just convenient. I had my business card there. It was handy, so I just used that one. The biggest thing is what you have to do is you have to make sure that you're properly accounting for it. You can do that. You shouldn't do that. Particularly if you're legally structured as an LLC, S Corp, or C Corp, you really need to keep those things separate. But the reality is that it does in fact happen. So when it happens, you need to properly account for it, and there's a way to do that. When you take money out of your business, it's called an owner's draw, or you can call it owner's personal pay or expenses. As long as you properly account for it, you'll be okay in the end, but it's something that you really, really want to stay away from.
Now, how can people account for it? Like, you recommend a certain accounting system, shoe boxes. What should people do?
Let's get away from the shoe boxes. A lot of people still do that, unfortunately, but they end up missing out on a lot of things. So I recommend some sort of tax software, some sort of accounting software. And there's a lot of them out there, a lot of products out there. I don't want to promote anyone in particular, but the cost of them have gone down over the years, so they're not as expensive as they used to be. And there are a number of them out there for smaller businesses, larger businesses, and even for personal expenses that you can track very easily with your cell phone. You can take pictures of your receipts, and then those receipts get uploaded into the software. And so at tax time, I don't have people coming to me with shoe boxes full of receipts or Walmart bags full of receipts. It's just the software, and everything is properly classified or accounted for, meaning that the income and expenses are in the correct categories. Because if they're not in the correct categories, that too can negatively impact your tax return.
So some of the ways that I can keep my expenses down when I hire a professional to help me with my taxes, what could they do? Could it be that does it cost me more if you have to classify it for me versus them doing it themselves? Are there things that they can do to kind of keep the cost down?
Yeah, and so that's where you get the separation between accounting and tax, or it's really bookkeeping, accounting, and tax. So the cleaner your books are and the cleaner your records are when it comes to me at tax time, it's going to make it easier for me, first of all, and it's going to go quicker for me to actually prepare your tax return. If I have to do accounting and bookkeeping, and there's a difference. So the bookkeeping is making sure that everything has hit the register, and then accounting for it is making sure that everything is properly classified. So if any additional service that needs to be added, yes, there's going to be additional expense, and it's going to take longer to process or prepare the tax return. And so what individuals can do, again, is just look into some sort of accounting software, even like I said, if it's something as simple as you're doing on your phone, or even an Excel spreadsheet that you can enter in your income and all of your receipts, and you can track it that way. That's much better than handing over paper receipts at the end of the day, because again, in those situations, so much gets lost and goes unaccounted for, and you end up missing out on potential deductions and credits.
So what are some of the biggest ones that people miss out on? For example, mileage is a deduction that people can take. What are some of the other ones people can take that they're just missing out on?
Yeah, it really depends on how you operate. As a W-2 employee, there are certain things that you simply can't take advantage of. What I find people attempt to do as a W-2 employee commuting to and from work, they try and take the mileage deduction, and that's not what it's meant for. It's really for sole proprietors who are traveling to different client sites or what have you, or even if you're a single member LLC, you may be filing a 1040 with a Schedule C. So those deductions are for things like that, but they're also for charitable time. If you're spending any time doing charitable work, you can take those mileage deductions, and a lot of people simply don't take those. They're not aware that they can take those deductions. Yeah.
And what about, hey, I want to buy a new car, but I want to run it through my business? How does that work?
Well, if you use it for your business, that's fine.
Right.
But if you're not using it for your business, you shouldn't do that. As an individual preparing a 1040, there is a difference. They do make a distinction between business miles and personal miles. But again, it's not commuting to and from work. But if you do have a side hustle, as they say, you can use the miles for that. Yeah.
What if I want to employ a family member, or even my child who is, not of legal age to get a job, but I can put them to work in my business? Can I do that?
Yeah, there are instances where you can do that. I do highly recommend that people reach out to an accountant or a tax professional before they do that. But yeah, you can actually employ one of your children or so on and so forth, and you can get a tax deduction for that. The threshold or the dollar amount does change from year to year. So again, you want to make sure that you reach out to a tax professional to make sure that if you do that, you do it properly and that you actually do pay the child, meaning that you are actually cutting them a check. You don't necessarily have to give them the money. It can go into an account, but you do have to account for the fact that you are paying them a wage.
So say that all this is going over my head. When we talk about numbers, it's just like, oh, I just don't really understand it. What would you recommend?
I always recommend people go to the source. Go to the Internal Revenue website, go to the Illinois Department of Revenue website, and the language that they have, it's a pretty easy read in most cases for the different tax laws and deductions and credits that you can take. If not, reach out to a qualified tax professional, a CPA, and even someone who just has experience or who's a registered tax preparer. They can give you the information, the current tax information, tax law changes every year, so you can't depend on what happened last year and think it's going to work for you this year. You want to make sure that you speak to someone who is versed in the new tax laws.
So say I do have a tax accountant or a bookkeeper, but I am trying to communicate with them, but I'm still just not able to grasp what I'm supposed to understand. What would you recommend in that situation? What are the basics that I should be able to talk to about to a tax professional?
You know, again, it depends really on the type of income that you have. If you're a W-2 earner, the conversation should be pretty straightforward. You may have some children, you want to take deductions, you may have some education credits. A tax professional has to be able to communicate with their client in a way that the client can understand. So you want to make sure that you're not using a lot of lingo or business lingo or tax lingo that the average taxpayer is just not familiar with. So it's really up to the tax preparer, the professional, to make sure that their clients understand what it is that they're trying to communicate.
And besides record keeping, what other tips that you get for that business owner who, you know, it's almost, you know, the tax season's almost ending here, but even for next year, beyond record keeping, what should they do?
Yeah, beyond record keeping, it's preparing. So make sure that you are prepared for that next tax season. And your tax preparer, again, that's something that they can offer you. It's typically, a lot of times it's an additional service called advisory or tax planning services. Because what happens is, you know, tax laws change with different administrations. With the Trump administration, we saw the Tax Cuts and Jobs Act, and then under the Biden administration, we saw the CARES Act. And all of those things impact your future, current and future taxes. So a tax preparer or your accountant will be versed in those things, and they can give you tips and tools on what to specifically do to prepare you for that next tax year.
Is that just a list, or you should meet with them quarterly? How often should you be meeting with your accountant?
At a minimum once a year, if not twice a year. And again, it really depends on how you earn your income. A W-2 earner, once a year is typically okay. If you're self-employed, I would highly recommend that you meet with them quarterly.
Now, how does my taxes or my record keeping impact my ability to get loans and credit and things like that?
It has a huge impact on it. You know, one of the things that we saw during the pandemic, a number of loans became available to businesses, and there were people who were operating without a legal structure, without accounting software, without business bank accounts, and they were not able to apply for those loans. And so they missed out on a lot of opportunities. So if you're operating a business, you want to make sure you have a business bank account at a minimum. And if you're operating as a sole proprietor, even though you're a sole proprietor, you still may want to separate those funds from your personal funds, just so that you can properly allocate what was for the business versus what was truly personal. And if you're anything beyond a sole proprietorship, you absolutely have to have a business bank account to make sure that you're able to demonstrate that you're doing business, that you're operating for the purpose of making a profit, because all of those things make a difference when you're going after a loan. It's not a hobby, it's a business. And so if you're not making a profit, a funder, whether it's a bank or an investor, is not going to see you as someone who could actually give them a return on their money.
Okay, perfect. Thank you so much for
You're
these
welcome.
tax tips. And I'm sure the audience is going to be using these very soon.
Hi, I'm Corey Timms, host of In My Own Words. Tune in this Friday at 7:30 p.m. on Channel 19 as we hear the personal journeys of some of Chicago's most influential leaders.
Wouldn't you love to sit back, relax, and know that your finances are taken care of for you? Saving money requires willpower, and this can be tough. Let's give you an example. Every New Year's, people set resolutions to try to be better. What happens generally is people fail on those resolutions. We don't want that to happen with money. Many times people want to save money, but other things keep coming up. Example, maybe I'm trying to put back money for something and I go to the bank and I say, I'd like to save this month, but let me pick back up next month to really get things going. And then I come back next month and, well, another excuse has popped up. We want to make sure that we're avoiding those type of scenarios, and I will work on automating my finances. automation is key. When you automate your finances, it puts you in control of your money and not your money in control of you. Don't force yourself to go to the bank every time you get paid to deposit that money in a savings account. I want you to work with your local banker or use online or mobile banking. Transfer a certain amount each time you get paid into a savings account. For example, if I just put back $20 a week out of every weekly paycheck, I'm going to generate over $1,000 a year in that savings account. And when you don't see the money, you don't miss it, you don't spend it. So let's talk about some benefits of this. Paying yourself first. We understand that we all have bills to pay, whether it's the mortgage or the auto payment or the electric. And what happens is if we don't pay some of those other bills, we may lose some things in our life. But if we don't pay ourselves, nobody really comes to get us. So I want you to hold yourself accountable. You can save for any number of reasons, whether it be vacation, new car, etc. But I want your first choice to always be putting that money in an emergency fund. We never know when emergencies are going to pop up. So think about what's important to you, back into the numbers, and make it possible through automating finances. So for example, if I want to save $5,000 for a down payment on a new house in 5 years, simply put $20 a week into that savings account every single week, and in 5 years you'll have over $5,000. When you are intentional about your finances, you can achieve more than you think. Be sure to work with your local banker to start automating your finances today.
Hi, I'm Tawana Streeter, host of DIY DEI. Tune in on Mondays at 7:30 p.m. as I discuss diversity, equity, and inclusion in the workplace.
Today, we have explored ways a business can give back where the whole community benefits while also navigating the complex world of taxes. Running a successful business is more than just making a profit. It's about building relationships and supporting the community around you. When businesses give back in the form of new employees, contracting with local companies, and partnering on community service, the whole community benefits, and as a positive side effect, your business benefits too in the form of higher employee morale and a positive community profile. However, in order for your business to be around to actually help others, you must have good record keeping and pay your taxes. Without good record keeping, you cannot take advantage of opportunities that come your way from clients that require financial and compliance reporting as well as any potential tax breaks. My challenge to you is for you to review your current record keeping processes to see if it meets your needs from a tax and reporting perspective. If not, find the time to make a change. The longevity of your business depends on it. If you have any questions about today's or past finance topics, please email me at Kimberly@inthemoneyemail.com and we may read your question on air. Thanks for watching.